Hi, it's Lee, and welcome to the Tesla Economist. I've been giving extra thought to Tesla's stock price lately. I guess this is partly due to me trying to become more of a trader these days, of which I mean concentrating on my trading more, not trading more of my position. Remember, I'm 90% shares with a hold strategy, and the vast majority of you are too, and don't care about the stock price until 2030, blah blah blah. But that's not really true, is it? Although it is rationally true, it's not mentally true. You care what the stock price will be in the meantime, and you care what it is today, because you're human, with all associated emotions that come with the package. Seeing the stock price move up validates your preconceptions more and keeps us confident, makes us feel better, and makes us feel wealthier, despite it not rising enough for us to ever consider selling. I've really been trying to get in tune more with the market and how it will react to Tesla, especially in this tough, unpredictable economic climate. My consensus is that the market no longer cares much about the future and is more concerned about the present. It wants tangible assets with real returns, hence why high dividend stocks are outperforming growth stocks. Money has become more expensive and is becoming even more expensive. When it was pretty much free, you could throw money at investments that may not see a positive return until perhaps as long as next decade. Companies like QuantumScape, for example, which had a high of $115, currently trading at around $10. Oh, wow, that's quite the drop. Or Rivian, $130 down to $33. These are huge drops in value. Investors are less patient in these economic times. And the same applies to Tesla. Wow, robotaxis worth trillions of dollars. Yeah, sure, but not for some time still. It's really easy to get ahead of ourselves, but as much as Tesla resembles a tech company, it's still at the mercy of its manufacturing. And Tesla makes really big products, the biggest mass-produced product segment in the world. Not smartphones that are so small they can fit in your hand, but products that are so large your entire body can fit inside them. They take time to design and scale. In addition to that, we faced COVID, which set us back, and the future of the company hangs on the success of the 4680 cell, which is clearly facing some issues. Despite once past said issues, it will likely be better than we were ever told on Battery Day. And I've been vocal about how important the 4680 line is. Yes, it's amazing that Tesla can ramp up to such high levels on a production line in China and can hopefully do even better than that with their newest production techniques. But it still isn't enough to take us to some serious returns until we see the 4680 sales ramp up. And again, the market doesn't seem to be taking this seriously. I think the market wants real numbers. We should see around $5 billion in earnings for Q3 compared to $3.3 billion in Q1. That's quite the jump, despite that only being a 20% increase in deliveries, yet still over 50% more in profit. Again, this is the economies of scale kicking in more, along with some really high price increases. I think this will move the stock somewhat, and we could see around $330 to $350, assuming no major macro movements. Q4 should reach about $7 billion in net profit, which, again, I would hope it pushes the stock to around $400, perhaps $420. Yes, sure, there are tons of other amazing Tesla events happening that all mean a lot to us, but I think we are too echo-chambered, and just because we understand it, it goes over just about everyone else's heads. Elon will tell us something, and instantly we might think, wow, that's worth an extra $1 trillion valuation to Tesla. Awesome. But the market doesn't see it that way. In fact, often the opposite. Like, what is this delusional CEO thinking? Launching a vehicle that looks like that? He's totally lost the plot and shouldn't be in charge of Tesla. I think we have a lot more faith in Elon than the average person. Yet we see these miraculous engineering feats that Elon is able to achieve, and we think, well, if he can do that, then surely he can probably do this. And all the things Tesla have achieved to date, well, that was when the stock price was about 1/20th the price it was today. Well, Tesla has added a ton more resources and hired a lot more people to help them with this mission, and learned a thing or two on the way. Yet, since then, we've still not seen any new innovation, actually in any products, perhaps except the gigacasting machines. But the stock was still a lot lower even back then. Now, don't you think all these extra investments on R&D and talent has gone somewhere? Anyway, that's just for the fanboys to understand, it would appear, as the rest of the market is missing it all. So the market wants tangibility right now, which is going to come down to real numbers, production numbers and profits, along with new models and new factories. Now, I talk about how Tesla's stock does move in an S-curve, but that doesn't mean it will triple overnight. It means it remains flat for a few years and then starts to run for perhaps a further 6 to 12 months. I think we have a more comfortable price after Q4, but this could get hit down again with further 4680 delays. In the meantime, the company is going to be pretty much carried by China. China's been carrying Tesla for some time. They've had great success there, and it's been great for cash flow. The speed at which they're producing cars there is simply phenomenal. The fact they're able to further ramp up to a much higher level again is just mind-blowing, and hopefully only just a small example of what we will see in Berlin and Texas. China will also expand further too, and CATL and BYD will continue to supply Tesla with more sales to further help. To be honest, right now, Tesla China is the heart of this business, hence why the lockdowns hurt so much. Berlin and Texas are not pulling their weight, but next year we should hopefully see another China factory operational and no doubt cranking. The market will give that value. However, Q1 may suffer a little if we still don't have 4680s. We still have some time until we get there, but there will be no significant stockpile of 2170 cells remaining. In fact, it may even be possible that Tesla are choosing not to ramp up Texas and Berlin that much right now because they don't want to deplete the stockpile as fast and would rather produce 1,000 a week or so for the rest of the year than ramp it up to 2,000 or 3,000 and have none left for Q1. I would love to tell you that it'll all be okay, but we don't know yet. However, Elon seems very confident about it. I just like to see it for myself, and I can't wait, as it will make me revalue Tesla in a big way, and I will take on a different investment strategy as a result. But once they are running, then wow, we will finally have the 4680 Model Y in production, the best EV in the world in every way. But of course, these sales need to be in full effect by mid next year, as that is when the Cybertruck is launched. Assuming the Cybertruck is launched on time, for lack of a better word, then there's going to be a boost in the stock. I mean, it's highly likely there could be some production issues along the way, as this is revolutionary new line, but seeing the production increase month over month will bolster a lot of confidence in this company. And as a result, people start seeing Cybertrucks on the road with their own eyes, then I think that will also affect the stock price. Then the more it ramps, the more the stock price might follow, along with the 4680 sales ramping and the Austin and Berlin Model Ys. Meanwhile, next year there's a chance that we will be in some sort of recession. Hopefully the Fed have broken the back of inflation without crashing the economy too much. I mean, they have to find a balance anyway, and from there towards the end of the year, we might be seeing our way out of it and ready for a recovery. This will obviously take a lot of the pressure off the market and start to see more reasonable PE ratios for a growth company such as Tesla. So to sum up, the stock to potentially over $400 around Q4, possibly higher, but this market has some serious gravity despite Tesla totally going against it as best they can, then a potential dip in Q1, then the real run-up should be happening for the rest of the year as Tesla really gets going with their new factories and we see some serious production. If they sort 4680s, then we could have around 3 million deliveries for 2023. I would hope that it ends up hitting around $900 to $1,000 stock price perhaps at the end of 2023 or early 2024 with all of this. And it could probably achieve that sitting at something like a PE ratio of 50, just as a very rough guess. Even if I'm really wrong, then what part am I wrong about? Well, in my opinion, being really wrong would likely mean perhaps I am 1 year off, which I would say is more likely really, really wrong. Well, are you really going to be that upset if you triple your money in 2 years' time instead of 1 year? Even if it took 10 years, then you've still done very well. And I know how many shares a lot of you hold, and that would make for a sweet retirement. When I invested in Tesla, I wasn't hoping to get 10x return until about 2027. Sure, I ran tons of scenarios where if this happened and that happened, then it could be higher, but none of them, absolutely none, had me 20x by 2021. There is always what I like to call the Tesla and Elon magic, or as Elon has even said, pulling a rabbit out of a hat. This is something that Tesla does, and I don't think anyone puts this magic into their estimates. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.